Good morning and welcome to the Capital Metals PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd like to hand you over to Greg Martius, Executive Chairman. Good morning, sir.
Thank you very much, Lee. Hello, everybody. Welcome again to the Capital Metals presentation on Investor Meet. We gave a presentation back in late September, so I'm approaching this with the view that this is just about an update, what's happened since then. I'm in London at the moment. We had the 121 conference for the last 2 days. We had 22 meetings back to back, and as a result, those of you who've heard my voice before will realise it's not quite functioning that well. But I will push on, and lucky it's a shortened presentation. Yeah, just a quick overview of where we're at. With the big resource of 17.2 million tonnes at 17.6%. As if some of you saw the release we put out on Monday, has got a lot bigger. And I think we're showing the potential that we've been talking about for a long time for this thing to be a multi-generational deposit. We've been travelling quite well on our share price. I think last time we spoke we were about 3.7p, and we're now over 5.5, and we've just been ticking up. It hasn't been going crazy. I just think as we deliver on our milestones, that's being reflected in the share price. Still got a long way to go, but there's a slide that'll show you where we're at on our share price and our milestones to go. So this is, we put this one up because we're just focusing on that initial mining area, which is about the middle of the project. It's on government land, and that's where the focus of the last drilling campaign was. And that's where we've had that nearly 15 times increase in the resource tonnes. And that initial mining area only covers about 5% of the deposit. So the deposit, as you will recall, the resource calculated in 2016 only goes to 1.6 metres because it went down to the water table, and it was drilled with a hand auger, which can't go below the water table. So we did 170 holes for about 1,500 metres. Earlier this year, we released a lot of the results as they came out in 3 stages. And then on Monday, we finally, over the weekend, we completed the resource upgrade. I'll touch on that again a bit more right now, actually. So if you can see on the picture on the right-hand side, the pink area was the boundary of the old resource, and now we've increased that about 3.2 times to the west and at depth as well. So the holes got down to about 15 metres. On average, it was about 8 metres. And that, what we've now got is it was 14.6 times the tonnes. We've got 4.8 times, so nearly 5 times the increase in the contained heavy minerals, at a 5% cut-off. But at a 2% cut-off, that's where it goes up, that incremental amount. And then, the implication is we're going to keep drilling. And we really want to drill the whole deposit at depth. And so, if we can replicate this, and at the moment there's no reason to suggest why we wouldn't, because we have found another strand line that's deeper. We don't know where it actually surfaces. It'll probably surface, somewhere inland, could be kilometres from us. We're not going to chase that because we've got enough to play with at the moment. But this could well be on this basis, over a 200 million tonne deposit. So, as I've said a few times, multi-generational. So this is always the slide that we put up showing that, how our grade compares to the rest of the listed companies. And so clearly that bubble, as we've been saying, is going to get a lot bigger. The average grade is going to come down, but we still have that very high grade first 2 metres. That at this stage we're assuming that we would continue to high grade that. We'd probably truck and shovel, and then we would bring in a dredge to do the deeper and wider material, which is lower grade. And a dredge is about 1/3 of the operating costs of truck and shovel, so much greater economies of scale. We've been working with the stakeholders on getting approval to use a dredge. At the moment, technically, we can't go below the water table, but there's very good conversations where we are encouraged that we will get that approval in time. In terms of what's happening in the government, what we've been saying for a while is there's some very encouraging signals coming out, because basically Sri Lanka went bankrupt during COVID and had to renegotiate with IMF and all its creditors, and they've done that. And they've got deferrals till 2028, and so the new government came in last year. They came in on the platform of anti-corruption, and they're very serious about it. And they put quite a few previous ministers and their teams in jail, and even just this week, the Bribery Commission has charged a former chairman of the Mines Department of the GSMB. So everybody's got the message that they are serious about it. But from our business perspective, what we're seeing is that they are focusing on a number of industries that they want to drive, and luckily mining and mineral deposits is a big focus for them. And just about 3 weeks ago, we had heard this was happening, and we'd been suggesting that it should happen for quite some time. They'd moved the Mines Department of the GSMB from the Ministry of Environment to the Ministry of Industry. And this is a huge move if you think about it. Under environment, we saw it. Some people in the Mines Department thought their job was to stop mining. And so there was a lot of conflict internally. So getting things done, and we managed to do it. Obviously, we did get mining licenses, and we are the most advanced project, but it was hard work. And we know this minister, and we've known his team, and we know how serious he is. And so we're very happy that this move has taken place. The Lanka Mineral Sands, which is the government-owned mineral sands project, is under the Ministry of Industry already. So it made more sense for them to consolidate it in that department. And he made a speech when he took over, and went down to the GSMB and made a very long speech. And we put some snippets of that speech out on our socials. And here's just a little quote here, just showing how serious he is about opening up the mining industry. And the first thing that's going to come out now, and we understand is imminent, we had heard that they had final submissions on it, on the new National Minerals Policy on November the 6th. So we're anxiously waiting to see that come out. It's a responsible document. It's a fairly high level about sustainable, environmentally friendly mining practices. But one of the key, the first objective of the policy, a very clear objective, is that Handanetti and his team, that they want to know what resources they have in country. They know that they are a mineral sands player, but they don't know the extent of it. And so, a great example, and this is going to empower Handanetti, because we'll show him. He said, "You let us drill. Look what's happened in just that little area. We are now 15 times the resource because you've let us go down to the basement." So I think that's going to really, really support his vision for the industry, and we will work very closely with him to just keep that practice going. Another thing we've been pushing for is that often the stakeholders would just make the decisions on their own, and they wouldn't consult industry. And so we said, they actually had this policy back in 2023, and they nearly got it right, but somebody poked their nose in and put some silly words that made the whole thing conflicted, and it basically disabled any future investment or development in mineral sands. So they've listened to us, and they've invited us on a number of occasions to sessions with the relevant stakeholders. So that we haven't seen that in the time that we've been involved in Sri Lanka, literally. And what we're expecting now after the minerals policy comes down is that we get that clarity on their requirements for value addition. And we've been lobbying hard with them. We've been explaining to them what the rest of the world does. And so, we're very hopeful that they don't put something silly in there like they did last time, and just give us time to grow together and understand what value addition is, proper value addition in an economic sense as well over time. Other signs that they're open for business, they have put out expressions of interest for joint ventures from foreign or local parties, industry players, for the government-owned graphite and phosphate mines. So that they came out over the last 2 months. We know that they're going to come out with the same invitation for the mineral sands, the Lincoln Mineral Sands project, probably early in the new year, and we're positioning ourselves with our partner Ambien to participate in that, because it's a very interesting project. It's been very poorly run and got a bad reputation, but we know what needs to happen. So as we've said at the bottom now, that the new Sri Lankan government is clearly sending the strong signal that it's open for business for mining. So the road to production, the history hasn't changed, but the important things is that step 7 and 8. And given what I just said about what's happening with the stakeholders and their direction, that just gives us more confidence. In our statement, we're saying that we want to start construction by the end of Q1. We have been saying, yes, that we'd get to FID by the end of December, and that construction would start by end of Q1. We are not, I've been pushing hard. I always try to push hard on the timelines. And technically, I don't think we will make FID by the end of the year, but the way we are managing it, if FID actually happened in March, that doesn't defer construction. We can still start construction, so the end of Q1. So pushing hard for that date, and then it'll be 9 months, and we're allowing up to 12 months construction period. So we should be in production in early 2027. And as I mentioned before, our share price has just, I think, reflected the fact that we've been ticking the boxes. We've been doing the things that we said we would do. And that's in terms of getting that drilling done, advancing conversations with the stakeholders, just getting more confidence in country, getting the local partner in place earlier in the year, building the team out, working very hard with Mineral Technologies on all the studies for our sort of PFS. It's an internal PFS that we need before we start that construction. So, we haven't overshot. Sometimes we get a bit disappointed when we put out particularly news like we did on Monday, when you've got sort of an up to 15 times increase in resource. But look, I'm happy with where it's heading. We've still got a long way to go. This is not to scale, but I thought we would show where we're at and so Hanneman Partners research report got that target of 18p, and so that's more than 3 times where we're at now. And our base case MPV 27p, and then the upside case of 44p, so that's sort of 8 or 9 times where we're at the moment. So my view is we keep ticking the boxes, and we will start to get closer to those targets. And I know Hanneman, on the back of the release that we put out last week, we've had a good chat with them, and then they put out a flash note on Tuesday. And we'll be working with them on how we remodel that combination of high grade and truck and shovel and dredging over the coming weeks. So last time we put this up, I think we were about $27 million, and now it's sort of 35 million market cap. It still was a long way off that base case MPV. So just in summary, our grade is still king, and now our size is going to get bigger, but it'll just give us, I think, more options, more alternatives, more flexibility as to how we actually extract value from this deposit. We are well funded. There's over $4 million in the bank. We're forecast to have well over about $2.5 million by the end of March. And at that time, when we start construction, there are good conversations going on the debt and equity and off-takers and prepayment. So I'm confident that won't hold us up. Naturally, they are waiting for we've got one more mining license we need. They're waiting for that approval before any of that will drop. But obviously, we're working that in parallel. So I think that wraps up the presentation. We'll open it up to Q&A, and I will just bear with me. I'm a little distance from the screen. And as I read this. So I've got a question from Michael. With the project scale now potentially far larger than originally planned, what additional resources do you anticipate to fund expanding drilling, development and construction? Yeah, it's a good question. We don't expect it to be that materially different to what we've got and what's in the current plan. In fact, our costs have come down quite a lot since we initially put out that 80 million capex, and the costs are actually pleasingly coming down even further. So we put out the first stage is 20.9 million capex a while ago, and we're not ready to put a number out on it, but we're actually below that. So we've got a bit up our sleeve. The size of the dredges that we'd be contemplating are not huge, and they're not that expensive. So I don't think the overall capex is going to change. It's just about how we're going to schedule this. We've got the budget to keep doing the drilling over the whole project, so we don't need a huge amount more for funding. But we will be, taking what we can. We're looking to raise 25 million that'll include a bit more drilling budget and a contingency and overhead funding when we go for that stage one funding that we're in advanced discussions on now. How do we plan to balance near-term cash generation with long-term expansion? I think I've sort of touched on that. It's we need to sit down and do more work with the model. We've got a very sophisticated model, and the reason that we actually made it quite sophisticated in that last cut was exactly for this. So it gives us flexibility to accelerate or slow down capacity expansion, to bring in MSPs in 3 phases as well. So it's something that we need to. We're very much focusing on getting to that construction point based on the plan that we have, which is just 175 tonne per hour wet concentrator plant. And in the background, we will be working on exactly what that question is addressing. Olive Port, is it a dead duck? Well, today in our stage 1 plan, we're assuming that it is, but given that this project, we're proving that this project is a lot bigger than what it is based on the resource that we had today, before this weekend, it could well come into consideration. So the issue is we've heard figures of sort of up to $15 million to dredge it because it's full of sand. So, if we've got this longer life project, that becomes less of a hurdle. We don't want to fund that all ourselves, but we'd definitely be spending more time on it. Can we quantify the differential between dry mining and dredging and how that affects the optimal mining strategy? Again, good question. We need to do more work, but so rule of thumb is, as I mentioned, that dredging is about 1/3 of the cost of truck and shovel. So the economies of scale are pretty impressive. So we've looked at sort of 5% cutoff and 2% cutoff. We need to actually get some pit optimization work done to understand where the optimal cutoff is, and we haven't done that yet. It's obviously fresh off the press from the weekend, so watch this space.
Greg, thank you for answering all those questions you can from investors, and of course the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, could I please just ask you for a few closing comments?
Yeah, so look, as I said, we're continuing to tick the boxes. We're now getting some pretty interesting questions that we need to ask ourselves, and what planning we need to do. We need to stay very focused on and getting to that construction point, and I continue to see that upside, and I'm looking forward to coming back again and seeing that share price even higher.